Okay, so in this lesson, I'm continuing with the first part that I did in the previous lesson. So please make sure that you check the previous one, because this one is a continuation of what we started on the previous lesson under standard costing. Okay, so remember, firstly, in this topic, you must be able to identify the formulas so that you will be able to calculate all the calculations. However, it's not only that. Under this question, you must also be able to interpret your answers. Okay, so today I come with another lesson, which is going to be very short. So it's question 2. VK Ltd manufacture a product which is called fruta. The company uses standard cost system and has established the following standard for 1 unit of fruta. Okay, then they give us the information for direct material, which is 1.5 kgs at 6 rand per kg. Then direct labor, manufacturing overheads, they give us the fixed overhead expenditure. Then during June, the company record this activity related to the production of fruta. So remember, what happened in this chapter is that we are going to be given the actual amount of the cost that they incur during the year, and they give us what we call a standard cost. A standard cost is the same as the budgeted cost. So let's first go to the required part. On the required, they said number 1, we have to calculate the price and quantity variance under material used in the production of fruta, which means that the price and the quantity variance, which is the same as used material. So in this question, in the first part, we're only going to focus on materials. Okay, so number 2, they said for labor employed in the production of fruta, we have to compute or calculate the rate and efficiency variance, which means under question 2, we are only going to focus on labor, the rate and efficiency variance. Then the following question is a theory question that you have to apply what you calculate. Then question 3, a fixed overhead expenditure variance and variable overhead expenditure rate, and interpret your answer. So number 3, we are going to calculate the fixed overhead expenditure variance and variable overhead expenditure rate. Then after that, we're going to interpret our answers. So the theory part is very important under this topic. Okay, so let's start with the first part. They said for material used in the production of fruta, calculate the price and quantity variance. In other words, you are calculating the price variance and the quantity variance. So the difference between these two is that under material price variance, we have to calculate the entire amount of material that has been purchased, while the material quantity variance, we only focus on the material that has been used in the production. Okay, so now we firstly have to identify the formulas that we are going to use. Okay, we did this on the first lesson, so let's just go and pick the formula that we are going to use. Okay, when I introduced this chapter, I explained about the use of this formula. So the formula that we are going to use is formula number 1 and formula number 2. So formula number 1, we focus on material price variance. This is all material that has been purchased. But number 2, material usage, is we only focus on what we have used. So that's the only formula that we are going to use under first required. Okay, let me just copy so that it won't waste time. Okay, let's go back to the question. Okay, let me put down the formula. Okay, so this is the formula that we're going to use. Then let's start with the first one. First one, they said we have to calculate material price variance. Okay, so we have to determine our standard price, then we subtract which actual price, then we multiply by actual quantity. So the first part is to identify those figures. Firstly, let's get the standard price of material price. Okay, the standard price of material price is 6 rand per kg. On the top, we have direct material, which is 6 rand per kg. So that's the standard price because it's fall under the following standard for 1 unit of fruta. So this is what we call the budgeted price. We budget that we are going to purchase one material by 6 rand. Okay, so let's put it in the formula. 6 rand minus the actual price. Okay, now let's check how are we going to get the actual price. Remember, the first part is for only standard prices. Then the second part, they say during June, the company recorded this activity related to the production of fruta, which means that's where we have to determine the actual price of material that has been purchased. Okay, let's take number B. They say a total 8,000 kg of material were purchased at a cost of 46,000. So they didn't give us a price per kg, but we have total price and the number of kg, which means that what we have to do is to divide a 46,000 divided by 8,000 kilograms. It will give us 5 rand 75, which means that this is our actual price. Okay, it's gonna be 5 rand 75 after you have divided those amount. Okay, then we multiply by actual quantity. Do we have actual quantity that we purchase? Yes, it is given. On number 2, they said a total of 8,000 kilogram of material were purchased. This is the actual one that has been purchased. Remember, on the first one I said we focus on material purchased, but on the second one we're gonna focus on what? On the one that has been used. Okay, you have to take note of that. The difference between usage and price of material. Okay, then we have to multiply by 8,000 kilogram. 8,000. Then we're gonna get, let me calculate. Firstly, you have to say 6 minus 5 rand 75. Then you get the answer. Then you multiply by 8,000. Then you will get the amount of 2,000. Okay, it's giving me 2,000. Okay, now we have to determine whether it's a favorable or unfavorable. Please don't try to use the strategy of saying that if you subtract whatever that you subtract and you get negative or positive, you're gonna say is that. No, please use the understanding to analyze this question so that you won't have a problem. Okay, even when you answer the next question, you're gonna be able to interpret your answer. Okay, what we have to analyze, how you have to analyze this question is very simple. Remember, you have standard price, which is budgeted price, and you have actual price, which is the actual amount that you use to purchase. So what you do, you compare those two amounts. You have to say that you budgeted to purchase material by 6 rand, but at the end you actual purchase them by 5 rand 75, which means that you purchased them cheaper than what you expected. In other words, that's a benefit on a business. We call it a favorable, which means that this amount is favorable because you purchase with less amount than the one that you budget. That's how you have to analyze this question. Okay. Then number two is material usage variance, which is the same as quantity variance. Okay. The formula said a standard quantity minus the actual quantity multiplied by the standard price. Okay, now let's check. Do we have the standard price? Yes, we have the standard price. Our standard price is 6 rand. Okay, then let's proceed. 6 rand, our standard price. This is the amount that we are going to multiply. Okay, then our standard quantity and actual quantity. Do we have a standard quantity? Do we have actual quantity? That's the question that we have to raise first. Okay, the actual quantity we have it of okay, remember in this one we only focus on usage. Okay, we have a total 8,000 material that has been purchased, but is it the one that we manufacture the entire year? No, we have to check if we have a closing balance. Okay, let's go to number C. They say there was no beginning inventory of material on hand to start the month. Then at the end of the month, 2,000 kilogram of material remain and in the warehouse and unused, which means that out of that 8,000, we have to subtract 2,000 because it was not used. And on this formula, we focus on used material. Please take note of that. So if you have the balance at the beginning, you were firstly going to add it from purchase, then you subtract the closing so that you will get the material usage. So material usage in this case is 8,000 minus 2,000, which means that our actual quantity, it will be 2,000. Okay, let me just keep the space. Then, okay, it's going to be 6,000, sorry, because we subtracted 8,000 by 2,000. Now we are looking for standard quantity. Okay, let's check. The first table is the one that we have to determine the standard quantity. Do we have it? Let's check. Remember, we're focusing on direct material. Okay, we have direct material on top, 1.5 kg at 6 rand per kg. Then they didn't tell us the, the standard material. Okay, which means that what we have to do, we have to say it, we have to look for the production for the year. Then we multiply by 1.5 kg that we've been given under direct material. That's where we're going to get the standard quantity. Why we call it standard quantity while we multiply by the actual production? No, because the plan was to determine the direct material by 1.5 kg at a rate of 6 rand, which means that to convert back to standard quantity, we have to multiply by kgs that we have under standard cost. Okay, then our production on number A, they said the company produced 3,000 units during June, which means that we have to multiply by 3,000. 1.5 multiplied by 3,000. It will give us the amount of 4,500, which is called standard quantity. 4,500. Then now we can minus 6,000. Okay, so if you calculate all this, you will get the amount of 9,000. Now the question keep rising. Is it favorable or unfavorable? Let's check again. The standard quantity is 4,500. Then the actual one is 6,000. So, in other words, we plan to use material of 4,500, but we end up used the actual quantity of 6,000. This is unfavorable. Why? Because the different, we call it a wastage. The different is a wastage, which means that in this case, it's unfavorable because we wasted more than what we're supposed to do to use. Okay, so that's how you should interpret this question. So let's go to the next question. Number B, they said the material were purchased from new supplier who is in need to enter into long-term purchase contract. Would you recommend that the company sign the contract? Okay, there is a question. Would you recommend? You can either say yes or no, depend on the answers that you get. Remember, in terms of the price, we were planning to purchase by 6 rand, but we end up purchasing by 5 rand 75, which means that in this case you can say yes. Why? Because we purchase by less price. This material are cheaper than the actual price that we were planning to use for material. Okay, the other answer you can say no. Why? Because this material that we are using, they have a lot of wastage. Why? Because we plan to use 4,500, but we end up using 6,000, which means that the difference of 1,500 is a wastage, which means that probable there is a lack of quality on this material. So both answers are correct, but make sure that you interpret them correctly. Okay, so that's how you should answer number one. Then on number two, they said for labor employed in the production of fruta, compute the rate and efficiency. Okay, let's look for the formula for these two. Let me just copy them. For labor rate and efficiency, variance. Okay, even on these two, you must be able to interpret these formulas with answers that you got. Okay, number two, there is a formula. Okay, let me reverse this and copy them. Yeah. Okay, so now let's start with the labor rate variance. Okay, we have standard rate on the formula minus actual rate multiplied by actual hours. Okay, let's start. Let's first look for standard rate, actual rate, and actual hours in order to determine this. Then let's go to direct labor. Then the standard rate is 12 rand per hour. Okay. Then if we go to number on the actual prices, we go to number D. They say the company employed 10% to work on the production of road during June. Each work an average of 160 hours at an average rate of 12 rand 50 per hour. Okay, so in other words, the actual rate was 12 rand 50, but the standard is 12 rand. Already, if you got my point from number one, you already know how you are going to interpret this one. The standard rate, we plan to pay the employees 12 rand per hour, but we end up paying them 12 rand 50, which means that there is a loss there. It's unfavorable. Multiply by the actual hours, which they state that they work an average of 160 hours. $160. Okay. Okay, let me calculate. It's gonna be 12 minus 1250, which we're going to get a 50 cent, 0.50, multiplied by 160. So the labor hour rate is 80. The question is it favorable or unfavorable? That's the question that you have to get. Is it a favorable or unfavorable? It's unfavorable. Why? We pay employees more than what we plan. Okay. Okay. So let's proceed. Now we have to go to labor efficiency variance. Okay. Then firstly we have to look for standard hours, actual hours, then we multiply by standard rate. Okay. Standard rate, we have it. The standard rate is 12 rand. What is happening here? Okay, the standard rate. Okay, it's fine. 12 rand. Then we open the brackets. Then now we have to look for standard hours and actual hours. How are we going to get them? Okay, let's start with the standard hours. Do we have it on our table? No. If you don't have it on your table and you are looking for standard, which means that now you have to focus on the production. Okay, let's go to the production. Our production is 30,000 unit. Then we have to say 30,000 unit multiplied by 0.6 hours. Okay, then you're gonna get 1,000. Okay, sorry, you're gonna get 1,800. So remember, out of that 1,800, they said, number D, they said company employed 10% to work on the production of road during June, which means that the direct labor, they work on the production, which means that it's only 10%, which means that 1,800 that you got, you have to say multiply by 1,800 multiplied by 10%. Then you're gonna get 108. So the actual hours we have it is 160. It's 160. Okay, let's start with 180 that we calculate minus 160. So your different must make sense. Make sure that there's no way that you can say it the standard rate was 50 rand and the actual rate was 2,000. No, you can't get that kind of different. Just make sure that you are different makes sense. Okay, 180 minus 160. and then we multiply by 12. Then our labor efficiency will be 240. Will be 240. Okay. Okay. Yes. So now is the time to interpret this one. So let's check the standard hours. We plan that the laborers will work 180 hours and the actual work 160. We plan that they work 180 and they work 160, which means that this is favorable. Why? Which means that the employees, they are more focused on their work. Why? Because they managed to complete their work in time that they were in less time that they were supposed to do. All right. So in other words, remember, once they work more hours, which means that the company there is going to pay more amount, because these employees, they paid according to the hours that they work for. So this is favorable. So number one, I think I interpreted is unfavorable. Then now the question is, in the past, number 2b, in the past 10 employees employed in the production of fruit are consist of 4 senior workers and 6 is no, is not 4, it's 4, fourth number. Then senior workers and 6 assistants during June. Then the company experimented with 5 senior workers and 5 assistants. Would you recommend that new labor mixed be continued? So your answer can say no or yes. It depends on the option that you want to focus on. Remember, your focus must be on the calculation that you did. It's either you said yes. Why? Well, because you are focusing on labor efficiency variance. Then you can say yes because when they are mixed, they can work less time, which which means that the company is going to pay less amount. Then your answer can change, and you can say what? You can say no when you focus on number one, labor rate variance. When we calculate labor rate variance, we find that if these people are mixed and they are now more, we are paying more amount than the actual one that we plan. That's why we got unfavorable on number 2. So that's how you should interpret your answer. The other one, in most question paper, they will give you favorable, the other one unfavorable. So you have to make sure that you are able to interpret all those answers. In case where you are given one option, which means that your answer will focus on only yes or only no. Okay, number 3, they said we have to calculate fixed overhead expenditure variance and variable overhead expenditure rate and interpret your answer. Okay, let's just go and pick the formula quick. Number 5 and 6. Remember, to calculate all these variances, it doesn't have a lot of marks, but lot of marks you're gonna get them when you interpret your answers, because you can find that to calculate one variance is 2 marks. Then when it comes to interpretation, they allocate a lot of marks. So be familiar with that and make sure that you are able to calculate all this and interpret. Okay, let's start with the first one, which they say that we have to calculate the fixed overhead expenditure variance. Okay, they said the formula we have to say budgeted fixed overheads minus the actual fixed overheads. Okay, this one is very simple. You just take them as it is. Okay, under standard, we have a fixed overhead expenditure of 42,000. Then on number G, we have fixed overheads amounted 45,000. So the actual one is 45,000. The budgeted one is 42,000. Okay, let's go to the formula. The budgeted is 42,000 minus 45,000. This will be an obvious unfavorable. Why? Because we budget to spend fixed overhead of 42,000, but we actually spend 45,000. So this is unfavorable. Okay, then lastly, variable overhead expenditure rate. We have to use the standard rate minus the actual rate multiplied by the actual hours. Okay, let's look for the standard rate, actual rate, and actual hours. Okay, let's go to the question. Fixed variable manufacturing overheads. Then we have a standard rate of 250 per hour. Okay, standard rate, we found that is 250. Then the actual rate, we have it. Okay, we have to find it. Then after that, we multiply by actual hours. Okay, actual rate and actual hours, that's the only two items that we have to determine now. Okay, number E, they say under actual. Number E, the variable manufacturing overhead assigned to Fruta on basis of direct labor hours. Okay, number F, the variable manufacturing overhead cost during June total is 3,600 rand. Okay, so that's the two options that we have to calculate the actual rate and actual hours. Okay, on our table, they didn't give us the they didn't give us anything. Okay, we have 3,600, which we know that is total actual amount that we spend for variable manufacturing overhead. Okay, so what we have to do, remember on number E, they said the variable manufacturing overhead assigned with direct labors. Okay, if you check on the table, they are both having 0.6 hours. Okay, which means that now we firstly have to convert our production that we have, which is 3,000. Okay, we're gonna say 3,000 multiplied by 0.6. Then we get a 1,800. Okay, then after that 1,800, remember we have to say a 10%, because remember they said it's assigned for direct labor, and the direct labor is only 10% of all employees of the companies. Then we get the amount of 180. So after that, okay, so apologies for the call. So I was explaining the last one. So we were looking for actual rate and actual hours. Okay, so remember, on the information that we have not been given the actual rate and actual hours, which means that, remember, I said if you are not given something, you have to focus on the production. Okay, so if you check, they give us on number F, they say the variable manufacturing overheads cost during June is total of 3,600. Okay, which means that what we have to do is to go to the production. Okay, on the production they give us 3,000. Then they say the variable manufacturing overhead is 0.6 hours, which means that we have to multiply by 0.6 hours. Then we get 1,800. Okay, so after we get 1,800, we go back to 3,600, then we divide by 1,800. Then you will get the actual rate per hour, which is 2 rand, which is 2 rand. Then now you have to multiply by what? By the actual hours. Remember they said it is linked with what? Direct labors. So we have 1,800 that we calculated. Now we have to apply number E that they said it has been assigned with direct labor. So direct labor is only 10%, which means that we have to say 1,800 multiplied by 10%. Then you're gonna get equal hour of fixed variable overhead expenditure rate of 180 equal hours. Okay, then after that we have to say 2 rand 50 minus 2 rand, it will give you 0.50 cent multiplied by 180. Then you will get variable overhead expenditure of 90 rand. Okay, the last part is to interprint now. Let's try to interprint. If you check the standard rate, the one that we plan to spend on variable overhead, it was 2 rand 50, but we end up spending 2 rand. Is it favorable or unfavorable? Of course, it's favorable, because we actually spend less. Okay, so this is how you should interpret this question under this topic. So don't only focus on the how to calculate and those formula, you must be able to interpret as well. So I hope you learn something. I will see you next time. Sharp.